Hey, oof. Hi guys. Hi, sorry. Hi everyone. I didn't know that I have started the webinars. Hi guys. Hi everyone. Good evening. Alright, shall we just wait for I think like 5 minutes. I will start the session, like 1 to 2 minutes I'll start the section. So sorry that I think I accidentally clicked the start the webinar, because usually we'll start at like 5:30 p.m. GMT plus 8. Okay, but it's okay. So today as you can see, we will talk about the advanced moving average strategy, which I will share with you guys. I have my favorite moving average to share with you guys as well. And after this webinar, we're gonna look at the key level together. And just now I was looking at the USD, and we can see that gold has, it's so crazy because during the Asian section, right, gold has tried to make an all-time high, and after the all-time high it was falling from the zone. It's about 874 pips from the highest to the low today, like close below 4,100. Now it's kind of pull back. Okay, maybe we're gonna look at the setup together as well. Hi guys. Hi everyone. Okay, I think shall we just begin our session. Why it said it's error here? Okay, so again guys, good morning, good afternoon, good evening, wherever you are. Welcome to IC Market Webinars. As you can see, today we will talk about advanced moving average strategy. I'm so sorry that I start like just 10 minutes early because I accidentally the webinars. Okay, you just hang on guys, I'm gonna check something. Okay, and I'll also wait for you guys to join the webinar as well. Hi guys. Today 14. Okay. Okay, shall we just begin? Alright, so before I start the webinars, guys, disclaimer as usual. Alright, so basically everything in this video is purely educational in nature. Alright, nothing in this video should consider as an investment recommendation for you guys to buy or to sell the instruments. Alright, so if you want to trade, just do your own due diligence before trading. Okay, and about myself, my name is okay, I think I put the introduction here first. Okay, Okay, so it's about myself, a little bit about myself. My name is Peggy. I'm an investment analyst and a prop trader. I have experience in the forex market more than 5 years now. Alright, and I have been doing the IC market webinar more than 2 years as well. So if you want to go back and look for the past webinar, you can just go back and look at the recording, or if not, just come and join the the live session and we can discuss if you have any question. Okay, so the agenda for today, basically we're going to talk about the introduction to moving average, the common moving averages out there, the natural moving averages of the market, identify the result also with the natural moving average. So basically I think today I'm just gonna share with you guys the strategy and the moving average that I'm personally using, and maybe a lot of the trader using as well. Okay, so what is moving average? So you can see here, MA or moving average is smooth price data by creating a constant updated price, average price. It's also to help you to identify of the trend by filtering out noise from the random price fluctuation, calculated over specific time period, for example 20 day, 50 day, or 20 day. I think the quite popular or famous one we use SMA or EMA. I'm gonna talk about that later, which is 50 or 200 a day. Hi, hello, where are you from? Where are you tuning in from? Okay, so today I know that the topic is quite simple. I just want to share with you and then share with you the strategy that I'm using the moving average to trade. Okay, so I think this webinar gonna be finished quite maybe early, and after that we're gonna look at gold together, and I will tell you what is the reason I short or why gold is falling from the all-time high at the price. Okay, I think it's like 480 or 85. Okay, that you can find that level to get exactly the same level. I'll share with you guys later as well. Okay, so continue. One of the most widely used technical indicator in trading, okay, can say like 95% or 90% the trader are using the either SMA or EMA, but I personally use EMA, which is 200 EMA and 100 EMA to kind of to trade gold. All right, so why we use moving averages? So of course we use to identify the trend, whether the market is now on uptrend or is on downtrend or is on sideways, meaning that able to look at the moving averages. If price stay above moving averages, know that price on uptrend. If the moving average is kind of cuts across the candle, we know that market is sideways. If price go below the moving averages, we know that it's a bearish or a downtrend. Okay, and of course it depends on the setting, how many period that you're gonna look back. You're gonna set for 50, 200 or 100 period, the look back period. Okay, we're gonna set that together later as well. You also can use the moving averages for support and resistance, because they are act at dynamic support and resistance. Because to identify the support resistance, one is you can use you just identify by yourself. You look how many oh, okay, Clinton, okay. Are you joining my live training just now? Yeah, I'm not sure. It looks like Clinton is the person name. Anyway, let's say how to identify the support. There is a two-way. First, right, you just identify by you look at the chart. Okay, you look in the past onto the left, how many price it touches or testing the level, and then we could say, okay, this is the resistance level, because price cannot close above and we have a lot of rejection, right? And another one, you also can use moving averages to find dynamic support resistance, meaning that it's on you. Oh, okay. why is the oh, okay, you talking to the guy. Okay, you say hello to the guy. Okay. It's too bad, right? Just now we was just a little bit beside is our webinar. We was we buy the bought the GBP/USD, right? I think now it's back to our entry. Okay. And another one, okay, to find support and resistance, you can just act as dynamic for support and resistance, meaning let's say this is the it's SMA, or maybe 100, which is maybe this one, right? If price is kind of like the break above, okay, if price pull back to the SMA or EMA, this one we're gonna say it's at the support level, okay, and then you can see price gonna bounce up. I will show you guys later. Okay, signal generation, so crossover and price interaction generate trading signal, like those like 50 close above 200 MA you buy, or close below you sell. Okay, but don't worry, I'm gonna show you guys later as well in our live chart. And noise reduction, you can use smooth volatility to review underlying trend. Okay, so now I'm going to talk about the simple moving average, which is SMA, and another one is an exponential moving average, which is we short from we say EMA. Again, I personally just use EMA to trade gold, not SMA. So if you want to trade like you want to use SMA or EMA, I think you have to test on the instrument that you usually trade. Okay, but to me, I test it out, and then I find that EMA is quite work well with gold, because gold respect the EMA quite nicely. I'm gonna show you guys later. Okay, so the definition for the SMA is like arithmetic means of prices over specific periods. It also calculated by the sum of the closing prices divided by number of the periods. Okay, the characteristic equal weight to all data point. The pro, simple, reliable, time tested. The con is a lag behind price action, slow to react to the changes. If you ask me so how to calculate, I think that it's just good to know. Okay, so if you want to find, I think you Google it. To me, I just want to know how to use it. I don't think like we want to, like, you know, spend time and calculate the closing or like closing price, or like how to calculate that. I think that's good to know. Okay, if you want to know how to calculate, I think you may Google it. Okay, just change the period. We're gonna, like, you know, practice together later. And another one, EMA. Okay, for the EMA, I'm using the EMA 100 and EMA 200. Okay, recommended you guys to use EMA 200 to identify trend, meaning the price above EMA 200, you know that you keep buying, you have a pullback and then you buying. Okay, price fall below EMA 200 and pullback, you sell. Okay, because whenever price is broken or broken below the EMA 200, the EMA gonna act at the resistance level. If price is stay above and then price pull back to the EMA 200, it's gonna act at the support level. Okay, they will say the weighted average that give more importance to the recent prices. So the calculation use multiplier to the weight recent data more heavily. Characteristic more responsive to recent price changes. Faster signal generation, reduce lags for the pro. And cons is say that can produce more false signal in a choppy market. Usually whenever you see the choppy market or sideways, you will see that a lot of EMA will just, you know, close or cutting the candle. Basically you don't trade. Okay, I'm gonna show you the example. Let me show you guys my live analysis here. hang on. Okay, this was my analysis for gold. Okay, and that's the reason why I short here. Private channel, I think gold analysis nowadays you need to use the elite wave. Okay, I'm not an expert about elite wave, but I know how to kind of like count the wave. It may not accurate, but roughly I know. Okay, just how to I do this. We're gonna look at like gold together, but let me show you the it's gonna delete. Okay, I don't want to delete that. Let's say over here I have using here EMA 200 100 and okay, this is too much. Let's just show you here. Okay, especially go, you can test it out, and you should go or using on a higher time frame like H1 or H4, okay, to reduce noise. All right, you can use another lower time frame, but you will see that our price later close above or close below. But if you look on a higher time frame, for example right here, whenever in the choppy market or sideways, this is EMA 200, you look here. Okay, you'll see that whenever the EMA casting the candle, we know that there is a ranging market. Whenever price is close above and now is a pullback, okay, they would act at the dynamic support level here. You may say that, but it may not pull back exact at the line, right, the EMA, but somehow if you were to look here, you can already identify the trend. Price has break above, and this level is your resistance, and this is H4 time frame, right? You look at this candle, one H4 candle break this resistance. Now you can see that it's a pullback, almost hitting the EMA as well, and then price is rising and rejection. So you can highlight the zone, and then you will know, okay, let's say if you don't have the EMA, you may not know what is going on here. Is this okay if you buy? But if you use the EMA, you will say, oh, price have close above, pull back, I'm gonna buy at this level. If the strategy, one of the things I share with you guys how to use those like Fibonacci retracement, right? You can see that for the small pullback, this one should be 38.2%. Right? You can see 38.2%. You can see that that's gonna be like the zones. This is gonna be the zone like that. You can highlight the zone. Price went to the zone, which is the candle, and you have the 38.6%. So you buy, and also price has go close above EMA 200 already, so you can buy. Let's say what if you want to use the SMA? Okay, it should be this one, and I'm gonna use the same period, which is 200, but of course we're gonna change the color. Should we use, I'm gonna use red. Okay, here what you see, it looks similar. I'm gonna filter out the here, let's just say here. Okay, first, okay, maybe it says support, resistance, break for breakout, close below, resistance, fall back. Now price has closed above already, right? This is a close above, so you're gonna wait for price to pull back, and is pull back, and you can see that rejected here is similar to the EMA. okay, either EMA is gonna be here. This is should be faster, right? Let's continue to see, right? And now either you're gonna use EMA 200 or you can use EMA or SMA. Also, it's up to you. This is the SMA tested within the zone, right? And the another EMA is gonna be here. It's not touching. Okay, so you would say that, oh, it seems like price has respect the SMA zone is better. Okay, now let me do forward testing. Okay, so now we buy. Okay, so the next hour I'm gonna go to the H4. Okay, H1, sorry. So in H1 I would say this is my OB. Let's say this is my OB, which I want to sell here. Is it okay if you want to sell based on price have always make the break of structure here, break of structure right here, still like make the higher high, higher low. Okay, what I want to do, I might go to the lower time frame and I want to see where is my SMA. Okay, price stay above, M stay above, or is above, right? Now I will go to the lower time frame. Okay, I want to sell. You can use the EMA for your take profit as well. We did well today. yeah. Okay, now I'm gonna sell here. Let's say I'm gonna sell here my profit for the sell entry. I'm gonna use the EMA for my TP. Okay, rising. Oh, meaning we got stop out, right? Meaning that remember we say that we're gonna buy at this OB. Now this OB is gonna be our frail breaker box. So we're gonna wait for pullback and then you buy. Gonna pull back for us? No, it may not pull back. Why? Because now they make the break of structure here. Okay, so meaning that if you were to hold the buy entry, you should hold, right? Because price is stay above. Let's see whether the price gonna pull to this level. No, right? What do you see? Is it not? It did not, and now they make the break of structure, which is this one, right? They make a break of structure here. So in this zone, this is gonna be our buy zones somewhere here, and we go to the lower time frame. Where's our EMA? EMA is here. Get slope up. Okay, let me see. Or maybe I go to the lower time frame M5. Whether this level have any EMA supported. Oh, okay. We're gonna buy at this level, right? We have the EMA supporting. Okay, now we buy. Okay, we buy. This is my zone. My zone where is a pullback supply zone here and have rejected the EMA on the lower time frame. Okay, you buy. Now we buy. What do you think that if the M5, if you buy here from the first is touched and then price is falling, and this one is gonna test it, and you say that it was acting at the resistance level from here. Okay, I go on a higher time frame, so I want to see where the price break. Okay, always refer to the higher time frame. Okay, based on M5 is a bullish already, so you shouldn't always stay in the lower time frame, which is where it's here, and then you say okay, because Peggy say if price break below, you pull back, you're gonna sell because fall below. Again, this is M5 higher time frame, bullish, price is stay above the EMA 200. So always trade the same direction with the higher time frame. go back and you go back to H4, you will know that this zone, right, we look for the buy entry of this zone. Okay, and you can see that start to have the green color candle. Okay, I'll go to the lower time frame, M5. Okay, you go to M15. Price still stay above, right? This is our zone. You'll see the price action here. Okay, you hold, right? You take profit. Why you take profit is here. So from here, let's say you're in zone about 2000 pip. Okay, so always reference to the high time frame, which we know that price has stayed above the EMA, either EMA 200 or SMA. You keep buying and price has make a break of structure, break of structure, break of structure. If you trade in the lower time frame, M15, you might get a false signal. You might say, okay, price break below, pull back, you sell. This is a resistance, slightly pull back, you sell, and now go to where our take profit, which is we buy. Okay, so if you want to trade and then you go to the lower time frame, they will give you kind of false signal. So always, this is, for example, is a good example. You should use on the higher time frame for you to run trend. For you to buy here, you keep telling stop loss, telling there. Okay, this is the example. All right. Okay, let's say what about the EMA 100? So these are they're using the period of 100 days ago. Okay, they use the data. All right. So this is same, right? Stay above SMA or EMA, slightly same. And now go ahead, raise back. This is M15. You buy. Anybody buy here? And buy here, which is what the support level. This level is how many percent? 30.2%. Yes, we buy here. We buy together, but I did not hold up there. Okay, we buy and then we close at 100 pip, and then we go and buy GBP. Or you still lock the profit at, okay, and after that the GBP it hits my stop loss, but that is okay. So overall today still profit, right? From here, remember, then I say that this will be end of wave 5, and then you're gonna see the pullback should be at around 38.2%. That's why we buy from here. Okay, so don't worry, we're gonna do analysis on gold later, because today I think I start a bit early, so I'm gonna end early as well. But before I end, I'm gonna do the our favorite instrument, which is XAUUSD. Alright, and they also have those like another popular moving averages, which is I don't use it. I saw this in the MT5 or MT4, but I don't use it. I don't want to, like, you know, try so many moving averages. I just pick one, which is EMA 200 and 100. That's it. So we have weighted moving averages. We call WMA. It's a linear weighting of the recent prices. We also have smaller moving average, which is SMMA, similar to the EMA but the longer period. And another one is HMA, reduce lag while maintaining smoothness. Adaptive moving averages, which is AMA, adjust to the market volatility. Okay, maybe we can try adaptive moving averages if I can. Okay, let me try adaptive moving. It is this one. Yep. It seems like so many people using. Oh, is this gonna be our new thing to use? I never used this before. Okay, it seems like let's back. Okay, let me pay back. Yeah. Okay, let me pay back. And it's, this one, it look quite good. It stay above, right? And then we buy. Yeah, maybe you can try to use it. I might play with this AMA. Okay, it look like quite interesting, and this is the resistance that we sell. Maybe we want to sell here plus Fibonacci 50%. Okay, so this was the sell zones, or maybe even to refer, and maybe price close below. You can see the red color. All right, let's just say you buy, pull back, and then we sell on the highest time frame. %, from here, 30.2% right there. Okay, let me use this, and then I go to H1. Let's say we sell. Okay, let's say we sell based on this level. Okay, now we sell. By right, you sell, right? You sell here, which is at 4006. Price is falling. There is a quite a few pip. No, more than that. 3,800 point or 350 pip, and they cannot close below the support level. And now, right, price has go above and pull back to from the resistance. It become our support, and then above the AMA, and then you buy. I think this is quite a good. I think I'm gonna like play with this one. And then if price close this level, we know that price close, we're gonna make a break of structure all the way on the highest time frame. Also above, I go to M15 to have a look when it's close. Oh, this is the M15 just now. Let's just go to the M5, right? Okay, whenever price is closing the candle, you should know that they are changing the momentum, right? From this lower time frame, bearish, okay, casting. Now it break above, pull back, which is this what our zone. From the resistance zone, now it becomes the support level. Okay, so I think this one, I think I'm gonna keep it. I'm gonna like play with this SMA later. Where is our goal right now? Anybody sell? This is our sell zone, guys, right? Is this, you correct me, Clinton, it is our sell zone. Yes, our sell zone where 61.8% before I start, right? This is our sell zones. Here is our sell zones. Remember, and you can see the price falling for the first time touch, falling almost like 150, and now it's falling again. So if you want to buy, I can give you the buy entry, but you manage your risk. This is buy entry. Okay, this is your buy entry, M15. So that would be M15. The price is about 1. Okay, this one is if you can take risk, okay, you go ahead. Okay, if you can't, don't trade, and don't over trade as well, because sometimes price may just all the way down to the floor here. So take note of that. But this is gonna be the zone that we're looking at, 20 this one like 24 to 17. Okay, take note of that. Take note of these zones. Okay, we're gonna test out together whether this gonna work out. This gonna work out. Okay. Fourth entry, yeah, at 24. Fourth entry at 24, 20, like 24, 25. If I want to like make from here to here, okay, from this week, you can buy these are zones. Okay, and you can see the rejection already. Oh, that's so fast, like 30 pip from just now, 25 to 38. Okay, let's just see in the zones. Just now I was going here. I'm gonna put like at this. I just put here, or it's the body was here. Let's just say it's the zone. Okay, guys. Within the zone, don't overtrade. So this is our buy entry, and based on this, they also stay above, right? And you buy, but actually price falling from our sell entry. Okay, this is our sell entry for today. Okay. This is just test it out. Don't overtrade. Okay, we will continue. I just want to see whether price gonna write less back the zone, and we have this AMA. Okay, you go to the M1. Okay, if you want to see. Oh, they also like give you the signal as well. Okay, I think they might fall to, if you add 26, another entry should be at 24, another 20 pip. Okay, let price come in the zones, and then let's see in M15 whether price gonna pull back maybe to 17. If to 17, meaning that's about 1,100 pip from like this 26 to 17 to touch this level. Okay, okay, price falling to the zone. Guys, if you want to buy, okay, you just have the tight stop loss. Don't overtrade. I think the stop loss you can just put like below 17. Okay, below 17. This is M1. Okay, we're gonna test out together, and then you will see whether it's work out at this demand and supported by price is above the AMA. Anybody buy, you can let me know. You see that? Strong. This is M1. Okay, yeah, I just found like this one is in looking quite good. The AMA is the first time, okay, I'm using this. It's the first time I'm using this. Okay guys, so if you buy, price has bounced just now, was so volatile, yeah. 300 pip, 30 pip. You can, like, if you want to aim for 100 pip, that would be at this. Let's just test out if we're gonna use this for the take profit. Okay, you're gonna use this for take profit at 30, maybe at 30 you can aim for 30. It's very volatile. Do you guys buy? Clinton, do you buy? Do you buy? Oh, okay, you bought it. Good job. Good job. Okay, you aim here. Okay, at least, okay, at least 30 for 134 TP. It's almost. Okay, it's at exactly 30. That would be here. TP already, no? Yeah, TP at 30. TP already. Okay, I'll set at 30. That's gonna be your TP. Okay, that seems like this is a workout. Okay, at least we don't really purely trade with this AMA. We trade because here also have the demand zone, right? You can see that it's bounced out very nicely. It already gives you repair bounce, okay, because we are selling from this about sell entry, okay. So if we pay the bounce from this, so give you 100 pip, just close it. Yeah, more than 50 pip, all should be happy, right? I'm not gonna sell, I'm not gonna buy again now. Just test it out. So if you want to hold up to you. So yeah, this one I think I'm gonna play with this like AMA later. Okay, and so the common MA periods, I just say for the short term, you can try like 10 or 20 day period of the MA. Use for the quick trade and momentum. Medium term 50 period industry standard for the intermediate trend. Okay, if there is very strong like training market, usually which it go, I saw that it respect EMA 50. It act at the support level, dynamic support level. Okay, I'm gonna show you guys. Okay, wow, very nice rejection. Let me do this, and I'm gonna change to 50. Yep. Right, on the higher time frame. Okay, which is here, or here. On the lower time frame. Okay, look for the lower time frame, look for the M15, right? You see that? I mean the lower time frame is M15 is that very strong uptrend. We know that on the high time frame is the bullish. On the lower time frame, you can use the like EMA to find the entry, like when price is pull back, then you buy. Then you hold. Whenever you see price stay away from the EMA, you know that that is very strong uptrend. You just keep buying. Okay, and then you can see that this is like equal low, price have broken. Okay, and still make the break of structure in the lower time frame. Price also break above the EMA 200 for the for the training market. Usually you can use the EMA 50, then you buy. Okay, you keep buying. Now today or just before the New York market, right, we sell because of one, if the you can see H1 and the H4 time frame. Also seem like the closing. If this candle closing, the body close below this level, which is 4120, body close below, the next hour we're gonna look for the sell entry. Okay, because if the body can close and gap this candle, I'm gonna say okay, that is a sign of reversal in the H4 time frame. Okay, but anything is possible. So we're gonna like watch out closely. Okay, and the long term I'm using 100 and 200 period major trend identification. That's why I say use on H4. Okay, you will see that popular combination 20 50 50 20 golden or that clause you can like try to use, but I don't like to trade with like closing, EMA closing, but you can like try it out yourself. Okay, for the common mistake to avoid, okay, you can say that you using arbitrarily MA period without testing. I think you need to test it, ignoring the broader trend contact. That's why go on a higher time frame, and then M5 M15 the MA have to stay above, you wait for the pullback and then you buy on the lower time frame, follow the higher time frame. Okay, trading every MA touch without confirmation. Okay, so this is the MA. If price slowly testing and maybe break above, slightly pull back here, you should have another confirmation, like it could be price action, or on your left could be the support level in the low time frame, or RSI or stochastic is at the at least below 30 or at least close to 30, and then you can buy, right? You can buy and then you can hold. You cannot cannot trade every chances of the like the MA, not adjusting for changing market condition, or relying on MA without other analysis too. So cannot really only trade with MA or close above, pull back I buy, close below and pull back I sell. Okay, you can't. You should have other like two or indicator to confirm the entry. All right, guys. So this is going to be the last slide, the key takeaway for the webinar today. So moving averages are foundational tool for trend analysis, so recommended on higher time frame H1 and H4. Okay, different MA types serve different trading purposes, so test it out yourself. Natural MA align with market cycle for the better signal. Reversal identification require confirmation from multiple factors. Combine MA analysis with risk management and other tools. Okay, guys, that should be today. Thank you so much, guys. And I still have like 5 to 10 minutes. Okay, because I start early. I accidentally click start, which I was doing some work, and then I say, oh, okay. At the beginning you will see that I was typing, doing some work. Okay, shall we just look at discuss a little bit on gold. Okay, now remember today I was doing the on my YouTube channel with like some of you guys, and I was saying I just want to like have quick using elevate, not like pull back, like look in the past, but we already done that. Okay, and I will say that okay, to me I'm gonna start from here and then here. Okay, price was here. Oh, sorry, it was here, right? I'm gonna remove the channel, the blackout, and then I'm gonna change the color. Okay, just here I was saying that, or they don't have here over here, so wave, right? 1 2 3 4. I say then I projected this could be my wave 5, okay, just from this, which is if you look at H4, I already see the divergence here. Price, we use the extension, okay, and you will see that for the extension, price close above 200, 161.8, right? 161.8, and I'm used 200%, okay, I'm used 200% for the extension because price had closed above. You can see price had rejected. So I was here, and another confirmation or confluence I'm using, which is Fibonacci projection, and it was at 100%, somewhere around there zones. So this one, or this was my zones that I tell you guys to sell, okay, right here, okay, and price went in the zones, and then we go to the lower time frame. Remember, we started to sell. My first sale was, I told you guys, at 4170. I have this small lot size, and I think price was okay somewhere at the, like, you know, M5, right? And was here somewhere rising. I want my entry was at 70, my first entry at 70. Price rising to where? The zones. This is within our zone at 79, almost hit 80, okay, and after that M5 closing with bearish engulf, and after that just boom boom boom, sell all the way to this level, and some of you guys might buy because you will see the price action, and this one, right? So if some you guys hold and price have broken below this support level, we'll go to H4, right? If somebody buy here, you might get stop out from this, and this one was the level at 30.2%, which I think that gonna be the pullback. So we buy. Remember, we buy for the first time. Price touches here, and now that the price rising 100 pip and then falling, I miss out of this very lovely my confirmation. I a little bit like but then I can't do anything, and then I go and trade GBP and I hit stop loss. So but today overall I still make a profit, okay. So I miss out this. If I just focus and stay at gold today, Clinton and I gonna buy here again. I don't know if you buy when you saw this, okay. And you can see price rising all the way, and to where? Remember, I said that okay, wait for the sell entry at 50 to 61.8% fib level, because this my resistance, okay. M15, I refer to the M15 here, and I have this from the body, right, the zone. From this one you can see price really went in the zone, right? We sell if you hold more than 200 pip, and just now we buy from demand here, done, okay. This is how I do analysis. But on the higher time frame or the bigger pictures, you're gonna look for the sell entry, okay. You're gonna look for the sell entry. What is this? Oh, remove the trend line, okay. That's why I say okay, this is gonna be my NOA 5, and then there's a divergence here, okay. There's a divergence in H4, right? Divergence here. So on the bigger picture, if you want to buy here, it's gonna be our pullback support level. So this one is gonna be gonna add in, that will be 50% fib, okay. Meaning that if this one they're going to like do like a ABC or the zigzag, they're gonna do like like maybe falling here, or maybe here, don't do A, maybe bull, maybe go to C here, Where is the, oh, they might do something like that. Okay, the initial or the long there, if I want to count, right, I would count from here. I don't want to go back to the like to the monthly, because we already did that together. I would say this 1 2, I would say this gonna be my 3, then maybe gonna be 4 here, and then continue to go 5, which is, yeah, and then this might do like ABC. If this gonna be the high for the, you probably want to pull back, okay, and do a big zigzag. Then for the entire move here, they might, okay, 3x40, 4 below, refer to the, it's gonna be the big zigzag. And I would say that here is a wave 4 from this is right here broken, okay, it's wave 4 here, this is a wave 5. We might see the pullback here, so we need to see. That's why I say for gold, right, because gold is uptrend, gold always expensive. That's why you can use the LFF to analysis, do analysis for gold. Okay, of course you need to go to the lower higher time frame, and then you count the wave. Okay, you've been counting, you will know that zigzag, this and that. If you want to like master, you can just go and practice and, like, you know, try to count the wave. If the wave not work out, meaning we not count correctly, and again, disclaimer, I'm not an expert about the LFF, but I know how to count it. Okay, whatever the strategy, that doesn't matter. If you know the basic one, like support and resistance, you already can trade. Okay, you don't need to like know so many strategy. You just pick one which is suitable for your trading style, suitable for your lifestyle. Okay, and then you just pick and stick to it. But I just say that because of gold, we know that gold is safe haven. Is definitely gold gonna expensive in the 10 year later or 20 year later. We're gonna see gold all the way hit where 5,000, 100,000. So I don't know when. Okay, I saw gold fall below 2,000. I saw gold was at 1,006. That was like 2, 4, 5 years ago. Okay, if you in the forex market long enough, gold was falling below 2,000, and after that was say, hey, it is gold, you know, when going to reach 2,000. Okay, and after that, whenever they broke, you can't you can't see them anymore. Okay, like here, no, it was here, gold was 2003. Okay, you count the wave, right? You can see that this will be wave 1, 2, or maybe 1 here, 2 here, and then maybe 3, and between from here to here you also have 1, 2, maybe like 3. I could say 3, then that will be extended. And then you can see that this is also when they break, and this is your another chart pattern, right? You can see that whenever they break 2,000, this was like 2,000 here, pull back and go was 5 high. That was in year 2023. That gold is below 2,000. 1,006 was somewhere here. That in October 22nd. I see gold, yeah, fall below, and now you see that very strong upstream, right? All profit. Okay guys, so that should be all for today. So take notes of this key level. I'm gonna catch up with you guys again next Tuesday. Okay, I could be wrong. Okay, like in each year, somewhere around here we have easily like tested 78.6%. So we're gonna see if price could fall to this kind of pullback. This is our pullback from the resistance become the support level. Okay, SNR here, so you take note of this zone, SNR zone here. Okay, if price fall here, you can buy. Okay, it is we have a news later today for the Powell speak. I'm not sure today or tomorrow, and if I'm correct that it's gonna be end of wave 5, then we're gonna see like pullback. We're gonna see the pullback and make a zigzag. Okay, I will keep it. I'm gonna keep this analysis for maybe the next week webinars. All right, guys. So okay, guys, thank you so much. I'm gonna catch up with you guys again. Bye for now, guys. Take care. All the best. Bye bye.